everyone. Welcome to the day 2 of the Synergy Traders number 31 Favorite Indicators event. And so we got a great full 10-person lineup for you today, starting with Simon Klein.
Okay, thanks, David. Thanks for that introduction. It's great to be here at this Synergy event. It's great to work with you, David, and Anka. So what we're going to do today is we're going to cover improve your trading results using this simple and powerful indicator. I know that we're talking about indicators today. I almost don't use indicators, but there's one indicator that I do have on my charts, even though I use it probably about 1% of the time. But it's very useful to learn this indicator. It's super simple and very powerful, and it can help you in many different scenarios, especially when you're a beginning trader. The precursor to this is I do recommend learning how to read price action, and again, that's for another time, how to read the markets using just the candlestick charts and nothing else, just price. That's the best way to do it. But this is more almost like riding a bike using stabilizers on the side at the beginning until you learn to ride well. This can actually help you with your trading. So for those of you who are here for the first time, it's a picture of me presenting at the New York Traders Expo, and the beginning of this year I was invited to speak in China, and this was actually done online this year because of the pandemic, at the Bogo Investment Forum. And this is I believe the largest and only Chinese forum for education in the financial world. So as a quick disclaimer before we begin, just bear in mind all comments I make here for educational purposes only. You can read the rest of that. And this is what we're going to cover. I'm going to give you an introduction to the CCI, as the Commodity Channel Index. I'm going to talk about different types of markets and how to use the CCI in uptrends and downtrends and sideways trends, and a topic that's very interesting, which is a super powerful use of this indicator, is the CCI Divergence. So what is the Commodity Channel Index? Well, it's an indicator which is under a class of indicators called an oscillator. It was developed in 1980 by Donald Lambert, and what it does is measures variation from the statistical mean. What does that mean? That means that if current price relative to an average price over a given time period. So if price gets, we talk about overbought or oversold, or reverting back to the mean. So if price gets too overbought, it may revert back to the mean, or too oversold, it may revert back to the mean. Now again, you have to understand the context. And you can use this indicator to anticipate trend reversals. And I'm going to show you some examples of that as we continue. So how's it calculated? For those of you who love mathematics, as they say in the US, math, and in England, maths. Okay, so what's more important than understanding the calculation is learning how to use the CCI in the live market. So that's what we're going to do later on. We're going to jump into the live markets. I'm going to teach you how to use it, show you some examples, and then jump into the live market and see what's happening now and if anything's setting up according to what we just learnt. So this is how you calculate the CCI. It's usually using the 14 period. That's the standard, but you can use whatever period, just like with moving averages. And you've got the typical price here, and this is what the constant is, so that most prices, 75%, will be between minus 100 and plus 100. Okay, so what can you do with the CCI? You can identify overbought levels, and you can identify oversold levels. You can hear my wife in the background, the kids. Apologies for that. Anticipate changes in trend, and you can time entries and exits. You can also filter out low odds trades. So you can use this as a filter to stop you taking trades that you may have taken according to other means. So let's go through now some market types. So you can have uptrending markets, downtrending markets, and sideways trending markets. You can also have markets that are in trend-less states that are not in trends at all. Okay, it doesn't have to be in a trend. They're going to have a training called How to Read the Trend, which will take you through how to read the trend using price action alone, okay, and using the candlesticks. You know exactly when trends begin and end. So how do we use the CCI? So the CCI looks something like this. And we're going to look into the chart soon. These are the two important levels, the minus 100 and the plus 100. And remember that 75% of the time, most prices will be between the 100 and the minus 100. And plus we also have the zero line, which is the mean. So how do you use the CCI? So this is what a buy trigger looks like. And again, this is maybe not the traditional way of using it, but this is what actually works. So when you watch the market over here, when you're watching the CCI and it goes from below minus 100 to above minus 100, that triggers a buy signal. Now again, you don't want to take it every time it happens. It has to be in the right market conditions, okay? If you're looking for a buy, and we're going to show you how to actually do that soon, some examples. So what does a sell trigger look like? Well, the sell trigger's the opposite, and we're looking at the plus 100 level. When the market goes from above plus 100 to below the 100 mark, that sets up a sell signal, a sell trigger. So many years ago, probably about 15 years ago, I used to use this indicator a lot to time entries when I was trading on the 1 minute chart, to actually wait until it triggered and time my entry, because what I wanted to do is get into the market and it move immediately, especially on that time frame when I was kind of more scalping, going for small burst moves, but super accurate entries. In, out, I'm done. And doing that quite a number of times a day. So this can help you do that on the smaller time frames. So how to use the CCI in different market conditions. Like everything else in life, you have to understand the tool you're using and understand how to use it in different conditions. Much the same as you'd have to, if you learn how to use a screwdriver, for example, then you have to learn how to use that screwdriver in different conditions. Different jobs that you have to do require you to use it in different ways. If you're driving a car, for example, you learn how to drive, but you drive differently in different road conditions. You drive different if there's a lot of congestion on the road, or if you're driving on the Autobahn in Germany, for example, on the 200 mile an hour lane, you're not going to drive the same. So how do you use the CCI in different market conditions? So remember we talked about the buy trigger when the CCI goes from below minus 100 to above minus 100. And the sell trigger is when the CCI goes from above 100 to below 100. So if you identify an uptrend, then you want to look for buy triggers. You don't want to look for a sell trigger when you're in an upward moving market, for example. And if you're in a downtrend, so you have to identify the trend first, then you can use a sell trigger to sell. If you're in a sideways moving market, sideways trend, then maybe if you're in demand, you'll look for a buy trigger. And if you're in supply, you'd look for a sell trigger. Is everyone following so far? So let's have a look at some examples here. So here's how you use the CCI in a sideways choppy market. And you can see the market's going up and down and up and down. Notice what I've circled over here are buy triggers. So you can buy at the bottom, close to demand levels, and the market goes up. Notice there wasn't a trigger here, but there was here. So this is why you take the trade here and not here if you're using the CCI to help you get in. There's the trigger on the sell side and another trigger here on the buy side at the bottom. So you can actually use it to help you get in and out of trades. And then this is actually on the 15-minute chart. So you can also use the CCI to filter out buying the market at the highs thinking it's going to break out. How many times have you been in a trade, for example, here and thinking, this is going to break out, but we're in an overbought condition and the CCI starts to go down? It can help you to stop doing that, especially when you're in a sideways market. Now again, Even without the CCI, you can actually see you're in a sideways market in supply, and why should it break out? But this can give you an extra indication that the odds of it breaking out right now are not very high. Here's another example of a trending market. You can see the market's moving to the upside here. It's moving up, pulling back and moving up. So you can see when you get a trigger over here, when the CCI goes from below -100 to above, the market starts to move up. Again, this was a downward moving market first, and it started to move up here, went sideways here. At the bottom of the sideways action here, you can see the CCI triggers again, and in this upward moving market we get another trigger here and move to the upside. So you can see every time it goes from below to above, the market moves to the upside. Here's an example about how you buy demand using CCI. So first of all, you have to identify demand. And again, that's beyond the scope of this presentation. But assuming this is demand, the market comes down to demand. The CCI goes from -100 to above -100, and the market starts to move to the upside. The CCI is one of the few indicators that actually appears to be sometimes a leading indicator, not a lagging indicator, which is why I like it. Here's another example of how to sell supply using the CCI. So you identify a supply zone here. Market dropped from this level, hit demand, and went back up. Look what happens to the CCI over here. It goes from above 100 to below 100, triggering a move to the downside. So let's look at some examples of CCI divergence. So this is usually used to indicate, to give you a heads up that the end of the trend is coming. So here's a downward moving market, and you can see the market over here, the definition is the market made a low here, and the CCI made a low. The market made a lower low than the previous low. It went down lower, but the CCI actually made a higher low. That's what we call divergence. And you can see the market actually changed trends here, put in a higher high, higher low, and started moving up. The trend changed on this move up. The CCI giving you a heads up that it's not going down. That's the end of the selling. We're going to have a reversal here, and you can see that's exactly what happened in this example. And you can see the market continued to move up. And if we take a look at this example as it played out later, this was the example here. There's the CCI divergence. Look what happened to the market. It moved all the way up, went a bit sideways here, but look at that move happening. The CCI giving you the heads up, plus understanding how to read the candlesticks here. Beyond the scope of this presentation, the trend changed on this move up, meaning this pullback's buyable. Okay, let's have a look at another example here of an end of a trend. Here's a downward moving market. So here you see the market made a low. Here you see the market made a new low, but the CCI made a higher low, giving you a heads up that the market is about to reverse. Now, let's go over how to use CCI divergence to sell into supply. And I guess there's a beautiful way of using this as well. Here's a supply zone over here. Now you see we have an upward moving market into supply, but what happens when the market hits supply? We made a higher high as the market made a higher high over the previous, but the market made an even higher high over here than the previous high, but the CCI made a lower high, giving you the heads up that this is about to reverse. So look and see what happened next. Okay, the market went to the downside, all the way back down to demand. Isn't that great to see? Now again, if you go back again, this is what you need to see. As a trader, it's very important not to look at the picture afterwards like this and say, oh great, look, CCI divergence, look what happened after it happened. You have to know beforehand. So I took this picture probably in my trading room, and I was probably trading this as it was happening. And I said, watch this, and we want to be on the short side, and this is where we're targeting. And this is what happened next. Not after the fact, after it had already happened, because that's too late. Anyone can look at a chart afterward and say, oh, you sell here and you buy here. Well, it happened already. We're not, we don't make decisions as a trader after it happened. We need to make it decisions as a trader before it happens. So you have to learn to recognize this, and recognize this is supply. You've got CCI divergence, you hit supply, this is demand, this is giving you a heads up that this is about to happen most of the time. And here's another example, CCI divergence into demand. So you first of all have to know that this is demand, and notice the market made a new low. Here, the CCI made a higher low, and the market, bounced off this demand area. And continued to move up. See that? All from here. This is another example. Another one into demand, CCI divergence, and a move up from this level. Okay, everyone following so far? So what we're going to do now is let's jump into the live market and have a look and see what's happening today. And we can look at, and let's have a look and scan through and see if we can see any CCI divergences. And again, you can see, this is my supply and demand zones over here. So here's an example here on the dollar. If we cast over to this level over here, notice the market made a high here. Market made a new high here into supply with a lower high on the CCI. Notice what happened next. And again, we're on a weekly chart here. So again, this also happens on a weekly chart. Once this starts to happen, the week's playing out, you can see this is probably going to break the trend. It broke below this pivot here and went all the way down. Hit demand, and this is our example of CCI going from below -100 to above -100, and the move back up to where we are supply. And you can see we're kind of hovering over this area. Again, I'm doing this with you right now, whatever my eyes see, as we're doing it. And again, we've got another beautiful example here. Here the market made a low, the CCI made a low. Here the market made a new low, the CCI made a higher low. And look what happened from here. And again, this is demand. This is where we hit the beginning, this was beginning of this year actually. It's the beginning of this year, and I said this could be the bottom of the dollar for this year, which is starting to look like a possibility. You see the market moved up, CCI divergence giving you the heads up. Now I want to have a look at a few more markets. Let's look at oil. That's also kind of interesting, and we'll probably see an example here. Let's see if we can see an example. Here's an example of using it to buy bottom of it. Here it's ranging, and you can see when the market comes down to the bottom of the range, we get a CCI going from -100 to above -100, and the market moving up. You see how this is how you use it in a sideways market. Again, we can do it. It works on any time frame. And this was a 5-minute chart. Let's have a look and see if we can. Let's have a look at some more markets. Let's look at the E-minis. I think we have an example of this here as well. Almost. There's another. Here you can see also the market making a new low here and the CCI making a higher low. See that? The market making a new low. This is the market making a low, the market making a new low, the CCI making a higher low, and the reversal to the upside. And also when it crosses from below -100 to above -100, this is where the market. Now again, I don't trade with this too much anymore because I'm reading more the candlesticks. So I see I'm in demand. I don't need the CCI anymore, but again, it's a useful tool to help you, for example, here, to understand that yesterday was a buying opportunity on the E-minis. And again, the way that this market is set up is very typical. It based, and then it broke below the base, went in, and kicked off a move to the upside. And now we're just reaching supply, which is a reason why we may get a move, to at least a temporary move to the downside. Okay, let's look at a few more markets. Let's look at Bitcoin again to show you it works even on cryptocurrencies, Bitcoin futures. Watch what's happening here right now. Right now, we're in demand. Yeah, this is on the daily chart. We're in demand at the bottom of this kind of basing area. And look what just happened to the CCI here. It went from below -100 to above -100. And look what's happening to the market today. Okay. And again, you can look at it. You can look at that also on the hourly chart, what we just talked about, CCI divergence here. The market makes a low, the CCI makes a low. The market makes a new low here, the CCI makes a higher low and kicks off this move to the upside. And notice when, I mean, this is barely gone, but if it would trigger on the sell side as it's moving up, that's not where you want to take a sell, because it's an upward moving market now. Okay, so let's see if we can go through some more examples. You guys following this? Anyone have any questions so far? That it's pretty simple and super powerful. And again, what you want to do is you want to look at it as it's happening, okay? And we'll see if anything's actually happening in the live market. So, let's go to some stocks actually. Let's look at AMC. Okay, so here's a good example of how to buy. This is where there was a potential buying opportunity over here. This is demand. Big move up. Here's the market over here. Now look at what's happening. Market made a low here on this move down. CCI made a low. The market made a new low here, and the CCI made a higher low compared to this. And that triggered off, again in the right location, that triggered off a move to the upside. And notice also over here, we did get a move down when the CCI gave a sell signal, but then we came back to the mean and turned around and went up again. So what I would ask you to do is go and experiment with the CCI if you've never used it before. That's a good question. Can CCI be read in numbers? You can actually read the CCI. Yeah, you can look at, you don't need to look at the chart, you can look at the value of it if you want. But you won't see divergences if you're just looking at the value. You'll have to remember what previous values were. I use a regular setting on the CCI of 14. Yeah, one of my trading friends uses 11 because he was born in November. So, oh, yeah, as long as you're consistent with it, I don't think it makes too much of a difference. But the standard setting is 14. Let's even look at some start. Let's look at Tesla, for example. So again, you see CCI divergence into demand. See here, market made a new low, CCI made a higher low, new low, higher low, kicking off the move. Many times when the market wants to reverse to the upside, it has a big move down, and you'll see a CCI divergence. And again, in a downward moving market, when you get CCI going from below -100 to above, you see it doesn't work, it just goes down, it just continues to go down. Or you get little moves to the upside against the bigger move. Okay, so we've looked at the charts, I've showed you the live charts from now. And here's a CCI tip. Firstly, you have to understand how to read the charts, as we said before. It's not just, using the CCI without understanding how to read the charts is like driving a car without understanding how to read the road. It's not a good idea. Okay, don't use it blindly. And the second tip is use the CCI in the correct market context, as I tried to demonstrate here. And you're in an upward moving market, then don't look at the sell signals, look at the buy signals. So now you understand how you can improve your trading results using the CCI. Maybe take it a step further and learn how to read the trend using pivot analysis, what I covered before, how to understand how to read the trend using just price action, using the candlestick charts. So what are the benefits of knowing how to read the trend? So you can trade in the direction of the trend. The trend is your friend until the bend in the end. Now you can use a CCI together with that and understanding also where supply and demand is to understand where markets are likely to move from and to. But again, once you learn price action, once you learn how to read the trend, you don't really need anything else. So you'll know exactly when a trend begins and exactly when a trend ends. Make sure that you're never fighting the trend. Make sure you're on the right side of the market. And you can also develop a profitable trading strategy with this, or enhance an existing trading strategy. So here's my offer of how you can continue along this path. You can join my How to Read the Trend training session plus trading room, and this is what you're going to learn. You're going to learn how to identify the current trend of the market, to analyze the trend in multiple time frames, exactly when a trend begins and exactly when a trend ends, and how this knowledge will dramatically affect your bottom line. And you can also learn by watching us analyze and trade in the live markets in real time every day. We have a live trading room, so you can join the live trading room. So let me share with you what people are saying. It's Francesco. When I first watched How to Read the Trend module, I must admit that I did not appreciate the power of pivots and their interrelationship with supply and demand. Honestly, I thought it was more of a good education module for beginners, talking about what a candle is, and of course that I was smart enough to be able to read the trend already. Now after having been in a few days in the live trading room and seeing some pretty uncanny results, something clicked. I decided to rewatch the first education module, which is How to Read the Trend. Now I can see that it is really a lot more powerful than it first appeared, and it's quite deep. Sometimes we don't see what's right in front of our noses, as the old saying goes. I would say now that I know things about reading the trend that I did not have a clue about before doing your first module. The first thing I'm thinking is why I didn't do this 25 years ago when I started. He's now a successful trader. And again, it's very interesting. What I've tried to do in my trading career from the beginning, when things were also pretty difficult for me, this didn't come to me immediately. It's taken many, many years of hard work in order to give you the simplicity of it. But it's a masterful simplicity based on years of experience and many years of failure at the beginning of things not working. But I went back and see, why is this not working? How do I do it better next time? Johan, as a new trader, I jumped from one strategy to another, always looking for the magic sauce. I literally spent thousands of hours in various forums, blew up numerous accounts, and bought tons of online courses. After a while, I realized that most of this material is produced by people like myself, wannabes, without experience, who want to survive while learning how to trade for real. What struck me when I came across Simon's material was his true understanding of price action. He managed to condense all of this vague and ambiguous information into a few clear and fundamental set of rules and principles. I have to date probably seen his material a dozen times, and I always discover new details that are key in my now profitable trading plan. When people ask me for advice, I often say that Simon, TradeSmartForex.com, offers everything you need, nothing more, nothing less. I'm sure that his genuine interest in you as a trader will enable you to reach your goal far more quickly than most other alternatives. That's kind of interesting that a lot of the traders that I actually end up working with one-on-one are traders that have been trading for many years, sometimes 20, 30, even 40 years. and things are not working for them, and it's like back to first principles again, and teaching them a new way to read price in the most simple way that kind of makes sense and is very intuitive once you learn it. To understand how price moves, not just an indicator, but understand the reasoning behind price action, why price will move from this area to this area, and understanding really what's going on in terms of price. Not in terms of what's causing price to move, but what actually is happening in terms of price. Tom, I wanted to say I think what you teach in the How to Read the Trend training course is brilliant. Before that, I picked up bits and pieces from different traders, but it was never joined up. Your course brought it all together in a very structured and algorithmic way. No guessing needed. The facts jump off the chart. You're a mastermind. Matt, the trading room is very helpful in understanding how to go through the process. I've been trading for 11 years and I've not seen anything like what you do. Love how simple it is. I mainly trade options with trades that last 30 to 60 days. I've been looking for something I could use to day trade for 2 years now. I want to round out what I'm doing with another source of profits. I have not been able to find anything I could execute consistently. I'm just paper trading with your system, and I've been doing it for a couple of weeks now, and I've had far better results than anything I have ever tried. Markus, Simon's probably one of the best coaches out there with a heartfelt passion for coaching and a real understanding of how the market works. He helps you view everything in a new way. The way he teaches is also really good, and he goes through it until you understand. I can honestly say that I've gotten more out of this training than I expected. Thanks a lot, Simon. So again, this is what you get in the training. It's about 1.5 hours long. The usual price is $397. It's on demand. You can watch it as many times as you want. And you also have personal access to me. You can ask any questions via email. But most importantly, you're going to get 1 month access to the live trading room. And that's a subscription, which is $497 a month. Plus, you'll also get access to our online trading community, which is 24/7 via our Discord server. So you can connect and trade with other like-minded traders. Everyone in there is trading using this way, using my approach to reading the market. But they're all trading different strategies that mostly they've developed themselves. So you see the difference. What's out there in the world mostly is people teaching strategies. Not many people are teaching how to actually read the market and then how to develop a strategy that fits your personality and lifestyle. They're saying, do what I do, follow what I do, and you'll make money like I do. But that doesn't work like that, because it has to fit your personality and lifestyle. If it does, then great, but most of the time it doesn't. So that's why most of my traders, they learn how to read a market and then they develop a strategy that fits their personality and lifestyle, that they build it from the ground up, understand why it should work, and they can rely on themselves and don't need to rely on anyone else and no guru. They can understand how to read the market and rely on their own judgment of that. So here's our 24/7 trading community on Discord over here. So you can see, people posting their best trades and worst trades. You've got different trading ideas, things about trading psychology. We've got different voice channels and video channels where you can actually go and hook up and trade live with other traders if you want during the trading day. Again, it's entirely up to you how you want to use this forum. The idea is to have a community, and we launched this at the beginning of this year in 2021. So if you join now, the regular price is $894. The deadline is this Friday, and you're going to receive $497 off. So it's just $397, and you get 1 month in the live trading room. So here's the link to go to, and maybe we can type it in the chat area so you can click on it. It's let me type it in. So it's, should have had this prepared beforehand, but let me see if I can grab it somewhere. So again, maybe just type this in yourself. Yeah, thanks, David. Good job. So yeah, so just click on the link, and I'll take you through what you get. So there's a link, and let me take you into behind the scenes of what you're actually getting. So if you click on, you come to this page over here. which is what the offer is, how to read the trend plus the trading room. Okay, and if you click on buy now, it will bring you to the checkout. Now you fill out all your details in over here, and you can see, and I want to point your attention to this, you only pay $397 today. It's a monthly subscription after that, after the first month to the trading room, at $497 a month. Now you can cancel even immediately if you want, and you'll still get access to the first month, but you may want to stay in, like many people do, beyond that, because you see the value and you also get good trading ideas. We've called out a lot of market tops and bottoms. Like last year we called the top of the market before it crashed in March, the stock market, and we also called the bottom as well. And again, if you come in like today, tomorrow, and I see new members in the trading room, what I'll do is I'll go over how to spot all market tops and bottoms. It's almost the same every single time. It can only, and if I show you the pattern, you'll know what to look for using the trend every single time. It's the same on every single market. I can show you on oil, can show you on the E-minis, any market that crashes or has reached a top or bottom, we know before it actually makes its big move most of the time, once you know what you're looking for. So, and again, you can set a reminder for yourself, cancel anytime. I don't want people in the room. If you don't want to be in there, that's fine. If you do, you're going to get value from it. You're going to be part of our Discord community as well. You can ask and speak to any other traders. We have some very, very successful traders with many, many years of experience. So if you click all that, you'll get sent an email with your login credentials that will bring you to the membership site, which you can actually access from my website by clicking on members or the link in the email, which will bring you to the membership portal. How to read the trend training is part 1 of how to read the market professionally, which is in here. And when you click on here, you'll get access to just this, to the, sorry, one second, this one, to how to read the trend. You don't get, this is the rest of the training, but just start with this. It's a standalone training, and it's also part 1 of how to read the market professionally, which will also teach you about supply and demand and price direction, which are the 3-pronged analysis that I use to analyze any market and understand what's going on. The trading room is here, and let's see if I can get the right one this time, and you'll get access to the trading room. You can come in the live trading room here, and you'll see, if you click on here, this is our weekly schedule. So we have our weekly preparation session, which you can join live on Sunday, and then we have sessions from Monday to Thursday starting at 7:30 a.m. Eastern time. All the sessions are recorded, so if you can't make it live, I have people that are subscribed that they just come for the recordings because they get trading ideas and they understand how we're doing everything. So that's a recording from today's session, plus our weekly preparation session, which is a standalone subscription. You get also, this is our session from Sunday and the previous week. So you can go back and watch these videos. Watch the last week, for example. You can watch it immediately if you get access to it now. And then go and have a look and see how the markets played out. And it doesn't matter if you trade different markets, the principles are the same of how you analyze the markets. So that's basically what you get. You get how to read the trend, which is $397. 1 month in the live trading room, $497. That's a total of $894. Today, you only pay, and this is a special for this, anyone who's watching this or maybe watching the replay, $397. Go to this link, click on it, come and join us. And again, that's an investment of $397, which may potentially change your whole life. I was very excited yesterday. One of my coaching clients turned around to me and said she suddenly had an epiphany moment when things suddenly clicked of how to read the markets. And she's now seeing things clearly. So she went and started analyzing lots of charts, and it suddenly dawned upon her, I've got this. She suddenly clicked how to read everything. It all came together for her. So she was so excited because she's undergoing a few changes in her life, and she turned around and kids asking, what are you excited about? And she told her husband, I think this is going to be, this is going to change my life. It's going to change our life. Finally she's been trading for quite a number of years, but nothing concrete, nothing that she can actually learn that and apply for years to come. And again, the beautiful thing about this is it's going to work now and forevermore. So again, what I can do now is open up to any questions and answers. But what I want to do also, let's jump back into the live market for a minute, and I'll show you a trade that we called out today in our live trading room on the pound, and explain this trade. And again, using the trend. Okay, so here's a trade that we wanted to buy over here, or even earlier on, but buying over here, and we're looking for a target up here, potentially up here. Now, why is that? If we look at the 4-hour chart, what did we just hit? And again, you can see this. We just hit demand, and we changed. This is a change of trend. This is a downward moving market that changed trends when this bar closes, 4-hour bar. So this is your entry here. And if you look at, we've done over 50 points or 50 pips to the upside already. Yeah. There's your trade. Now, it hasn't finished yet. It's probably not going to stop here. It's probably going to go further up. So understanding this, now we're into this kind of supply area, but understanding that we're likely going to break this is a trade that we called out. And again, if you come into the training straight away, go and watch today's video, the recording, and you'll see how I'll explain this. I said, watch for this for 9 a.m. Eastern time for a long entry over here. And this is a beautiful trade. Even getting it from here to here is a beautiful trade. And you can see, you know, how this trade was setting up. And plus also, if you notice, I think we pointed this out before, the bottom being put in over here also with a higher low on the CCI. But again, besides the CCI, this was understanding how to read the trend was what would get you into this trade, the end of the trend on the 4-hour chart and room to move to the upside. Okay, so let me open up to any questions that you may have. CGC, let's have a look at, you're asking me to look at some stops. Okay, let's have a look. I don't have CCI on this one, but which one are we looking for? The daily chart. Yeah, this is bullish divergence over here. Kind of, you look at the low here and then the low here, this is a higher low, and we've got the market moving up. Again, it's currently downward moving from a trend perspective. We are coming into demand areas. Yeah. Question on Bitcoin. Let's look at Bitcoin again. Yeah. So you can see over here, for example, this is where to ignore the CCI. You see the CCI went from above 100 to below 100, but that's not a sell. This is because it's an upward moving market here. You want to ignore the sell signals. For now. Another market we looked at today was understanding, again, this is not CCI divergence, this is a higher low and a higher low, but this is demand, intraday demand over here, which is setting you up, and also for a buy, which we talked about in our trading room. We're in demand on multiple time frames here, and you can see that the market, you know, from 9 o'clock was a long over here, and a nice move up. Again, not much to do beforehand. Here's your indication that the market's going higher. There's a pullback into that initial move, and here's the move, the secondary move. So it's hard to get involved in here. Let's see if we can look at one other market. The other one we looked at was the euro yen. And again, you can also see CCI moving from below to above and a move to the upside here. And again, this is also not a sell signal because it's an upward moving market intraday from demand, upward. Let's see if we can look at one more and then we'll kind of wrap up. Let's look at that. So again, this is a sideways moving market, and you can see CCI going from above to below over here, and we couldn't get back halfway through the base. So again, you have to understand bases, and you can see the market went based at the bottom in the middle of here and setting up for a move down with, and again, direction down here, down to this area. So we're coming back into demand again. And maybe you can see CCI over here at the top, that we're about to go down here. See the CCI over here? This is how to sell the tops of the base. Here's the top of the base, CCI going down, CCI going down. Here we also went halfway through, moved down, kicking off a move to the downside. Again, sometimes you have to be patient. During our session in the trading room, it didn't set up. It set up at 9 o'clock to the downside. Okay, so let's have a look. You want me to look at crude oil? Let's have a look at crude oil. Let's look at crude futures, and then we'll wrap up. Yeah, so as we this was another trade we called out in our trading room today as well. Being on the long side here again, we hit demand. We're bullish market here on the monthly chart, and this is just a long over here, and during our session it was over here, moved up above, and again 9 o'clock giving the entry on the long side unless you wanted to get in on the base. You see this is a base. We moved above the base, pulled back here, and this is your entry. There's your move. And again, we talked about the target being up into this 70 area, and you can see we're almost there. We said 70 from here up. So today was a long on oil. Yesterday was Monday was a short. Monday was a short, and we talked about that as well. How to know that the market's likely to go down on this day. So you play on the short side, take this down. Nothing to do yesterday. Today is a long. And again, when you understand how to read the market correctly using price action, which is what I primarily use, then you've got a good idea of how to do this. And again, you can also see a bottom putting in here. You see the low, a new low, CCI making a higher low, and this is how we put in a bottom. But if you get involved in here, it's going to go up and down. I like to get in when it actually is ready to go. So that's called understanding what direction, understanding location, and understanding timing. So when you get in, it goes, and you don't have to sit through too much heat. Okay, so I think we've addressed the questions over here. So again, I want to thank those of you who have joined already. I look forward to seeing you tomorrow in the trading room, and enjoy the training, and come and join our traders. So I'll take this opportunity to thank you all for attending. I have a YouTube channel that you can go and you can kind of watch some free videos there, some example trades that I recorded a while back. Haven't been too active on YouTube recently, but my son's pushing me to, he's telling me that his YouTube channel's gonna outdo my one, so he's got a YouTube channel as well. And he's only 14, so yeah. So again, the link is tradesmartforex.com/promo, and I hope I want to say thank you very much for watching this. I hope it was a good use of your time, and that you found something valuable here that can help you move forward with your trading. So I want to thank you as well, David and Anchor, for having me. It's nice to share this with an audience that will benefit from this. So thank you so much, guys.
All right, thanks, Simon. Great opening presentation for today.